There we go. It's finally starting. Had to wait almost 2 minutes again. Really weird. Before the live stream software started. Okay, so with the major U.S. stock market indexes at or near an all-time high already, are new countermeasures already being put or about to be put in place to keep U.S. stocks going higher at all costs. You can see one of them on your screen. I'll talk about that in a minute, but first let's just talk about the major U.S. stock market indexes right now. So the Dow Jones Industrial Average is well over 29,000 at 29,398.08. It is off a little bit from an all-time high, but it's clearly not in a correction. The S&P 500 index is at 3,380.16. It is at an all-time high. The NASDAQ Composite Index, which is being driven a lot by Apple, the amount of money that's gone into Apple shares is just insane since May of 2019. Absolutely bonkers what Apple stock has done since May 2019. The NASDAQ Composite is at an all-time high, way above the 2000 technology bubble at 9,731.18. And yet here we have a number of articles coming out recently, just this week, whether it is the CNBC report from Kayla Tausch on your screen, that came out on Friday, that the White House is considering a tax incentive for more Americans to buy stocks, or what Jerome Powell said, how the Fed will aggressively use quantitative easing to fight the next recession, aka make sure the stock market doesn't crash. In my opinion, there are three main reasons for this before I talk about the White House considering tax incentive. Three main overarching global macro reasons. So, number one, President Trump has gone all in on the narrative that the U.S. economy is doing well, it's creating a lot of jobs, and the stock market is creating massive amounts of prosperity for many everyday Americans. Now, to some extent, this is true. For the Americans that do own 401ks and IRAs and index funds, they've done well on capital gain stocks. There was a Fidelity survey that came out earlier this week that there's now a record number of 401k and IRA millionaires here in the U.S. according to Fidelity. The number represents 1.6% of the 27.2 million IRA and 401k accounts managed by Fidelity. The average 401k balance rose to a record $112,300, a 7% increase from last quarter's balance. So, stock market higher. So, we're less than 9 months away from the November 2020 election, and President Trump is all in on the narrative that a higher stock market means the U.S. economy is doing well, and therefore then Americans should vote for either, if they voted for him already, they should vote for him again, and if they are on the fence, maybe an independent or thinking of switching, maybe they're a moderate Democrat and don't want to vote for Bernie Sanders, they should think about voting for him because he's selling the prosperity narrative. On top of this, and George Gammon has done an absolutely fantastic job of this, talking about the Treasury General account. I mean, most people didn't even know what that thing was. It was so insignificant up until the last year or so, and it's just exploded. And the repo problems that became public in September have really highlighted how the Treasury General account under U.S. Treasury Secretary Steve Mnuchin and President Trump has ballooned massively in size from barely a few billion dollars, maybe $10 billion, $20 billion normally with the Treasury General account, up to $400 billion. So that's a lot of ammunition there to potentially, and they could be using this. I mean, the drawdowns, if you look at a chart, and George Gammon showed a chart of this, go to his YouTube channel. His YouTube channel is growing exponentially. And go look at a chart of the volatility in the Treasury General account going up and down, up and down, up and down. It looks like that is being used as emergency liquidity injections for repo, to help with hedge funds, and to also boost the stock market. So reason number one, out of the three main reasons I can think of for why these countermeasures are already being talked about to move the stocks higher, is Trump. This is a major selling point for President Trump's 2020 re-election campaign. Reason number two, in my opinion, has to do with U.S. capital gains tax revenues. Now, I did an in-depth analysis on this in 2019. I included it in a video called how quickly is the U.S. national debt growing? That took me over 8 hours of work on research, slide deck, editing the video. There's a lot of work into that short little video that I put in. It's extensive. And if you're not familiar with it, definitely take the time to go into the archives and search for it. And I show that how quickly the U.S. national debt's growing, but also why the government is so worried with asset price inflation. And one of the main reasons, and I highlighted this going back to 2008 and 9, is how much capital gains tax revenues the U.S. Treasury lost on stocks and real estate. It absolutely collapsed in 2008 and 9. There was a hole in the government budget deficit, absolutely enormous. If you go onto the St. Louis Fed or Fred website and look at tax receipts for that time period, there was a $1 trillion drop in capital gains tax revenues in a very short amount of time. So for any government to have a drop in capital gains tax revenues would blow a hole in their budget, but that's just absolutely enormous, which is why and then that means either the federal government has to increase taxes or the Fed has to print more and start doing more QE if there's that large of a hole in the federal government budget deficit. So the federal government is clearly worried about another 2008 and 9, where if the U.S. stock market was to be allowed to crash, and I've been talking about this for a while, will they actually even allow a stock market to crash for even a couple months or 6 months to stay that low without crazy amounts of new rules changes, crazy amounts of new intervention, central bank currency swaps with other central banks, central bank currency swaps to governments, maybe foreign corporations. And the truth is, we just don't know how much is being doled out still. Now, we do know, thankfully, with the Ron Paul one-time partial audit and the Bloomberg Freedom of Information Act, or FOIA, request, we do have some information about those central bank currency swaps, and those are the largest amounts of liquidity injections that I've seen. Yes, everyone's talking about repo. Yes, repo in the US and China are bad. There's a lot of repo injections that have been done, but these things are tiny, really, compared to the amount of central bank currency swap injections that the Fed had to do to pretend that the system didn't totally collapse in 2008. Now, the number I was working with back then was like around $16 trillion, what we got from the one-time partial audit that Ron Paul gave out. But Pam Martins at, I think, Wall Street Parade or Wall Street on Parade, I can't remember the exact site name, and they cited a research study from a university saying the real number was actually 26 trillion. So when you add up all the anecdotal evidence and the Freedom of Information Act requests and what Ron Paul was able to get Republicans and Democrats to actually agree on for once, and I doubt we ever get a one-time partial audit of the Federal Reserve again because their lawyers are fighting it tooth and nail. But we found out just unbelievable amounts of interest-free bailout money, backdoor bailouts, covert bailouts were given out to foreign governments, foreign central banks, foreign corporations, multinational corporations. That's how bad the system broke in 2008. And, it was papered over, and all this liquidity from all these different governments and central banks has moved the asset prices higher. So reason number 2 for why these countermeasures are even being discussed already by the White House, leaked out to CNBC, and then also Jerome Powell, is capital gains tax revenues. They do not want, the people in power, the U.S. Treasury does not want the real estate market, does not want the bond market, does not want the U.S. stock market to crash for a long period of time. It will absolutely destroy the budget, the budget of the U.S. federal government and the U.S. Treasury. And then that means normally, because they're not going to soak people with insane amounts of taxes all at once, they prefer stagflate and tax and lie. That means the Fed has to come in and the Fed's already doing crazy stuff. That means the Fed has to come in and do even more, even larger crazy stuff. Reason number 3, China's cerveza problem. I can't say the real name, otherwise this video will be immediately demonetized. I say it once, and the Google AI censorship will immediately demonetize the video. This is the fact that they're leaking out these things right now shows that the government officials here in the U.S. federal government in Washington, D.C. and elsewhere are extremely, mostly Washington, D.C., but they're extremely worried that all the problems with the global economy, with China's economy, with multinational corporations having supply chain problems, that in the near future, the amount of papering over that's happening now will not be sufficient. So those are in my opinion, I was thinking about this for the last couple hours, those in my opinion are the three main reasons why they are even leaking out now that the White House is considering tax incentives for more Americans to buy stocks. White House considering ways to incentivize U.S. households to invest in the stock market. Under the proposal, a portion of income would become tax-free for investment purposes. The Trump administration is considering several proposals as part of a forthcoming economic stimulus package. Hopefully that this show wasn't too raw and unfiltered, because that's one of the common criticisms I get on my iTunes, that everything is too raw and unfiltered. I guess people want scripted bullshit stuff. You know, I've been in finance for 10 years, and most people are stuffy suits and too afraid to speak their real opinion, because then they won't get on CNBS or on Bloomberg anymore. As part of a forthcoming, I've spoken to a lot of mainstream finance people, hedge fund people, people on TV a lot that you would know, that you've seen in the past. And, you know, off the record, they might agree with me on a lot of stuff, but they have no backbone. They do not want to put it out there in public that they're saying these things, because then it means they won't be allowed back on CNBC or Bloomberg. So back to the article. As part of a forthcoming package of proposed tax cuts, the White House is considering ways to incentivize U.S. households to invest in the stock market, according to 4 senior administration officials familiar with the discussions. So then why, again, this goes back to the 3 main reasons. Why do they need to incentivize Americans to buy more stocks when stocks are already at or near an all-time high? If you are familiar with investment, normally you do not buy investments that are at or near an all-time high. Okay, so something's up. And I think it's the 3 main reasons. Obviously, there could be other reasons why they want to have these countermeasures in place, but I think those are the 3 main reasons that I'm working with now. There probably is other reasons, but I think those are the 3 main ones. The proposal, one of many new tax cuts under consideration. Oh boy. The tax cut stuff is a disaster because there are no corresponding cuts in government spending. This is incredibly dangerous. This is the equivalent of seeing that you're driving a car like Thelma and Louise, that you're able to stop before going off the cliff, and instead hitting the gas pedal as fast as you can and gambling that you're going to jump the cliff. Or that you see a train and that you think that you can get through the train intersection before the train comes. Oh my God, this is a proposal of all these tax cuts. There is no corresponding cuts in government spending. There has to be corresponding cuts in government spending. Otherwise, this thing, oh my God, it's just going to get so much worse. Proposal one of many tax cuts. Okay, off my soapbox now. Proposal one of many tax cuts under consideration would see a portion of household income treated as tax-free purposes of investing outside a traditional 401k. Under one hypothetical scenario described by multiple officials, a household earning up to $200,000 could invest $10,000 of that income on a tax-free basis, although officials noted these numbers are fluid. I think if that happened, I think once the Democrats have more control of the Congress, like maybe a 2/3 majority, if that does happen, or the Democrats get back into the White House in maybe 2024, it's looking like Trump is probably going to win 2020 election. As of now, he has the highest probability as of now, I would say. The Democrat candidates are kind of a mess. Democrat Party is also, it looks like it's at least some of it's tearing apart at the seams, because the moderate Democrats are just all getting kicked out. If anyone's not radical on all the different policies, they're getting shamed or kicked out, told that they're no longer welcome in the Democrat Party. I hear that all the time. So if there was this tax-free $10,000 that could be invested in the stock market, I could see a Democrat White House and a larger Democrat-controlled Congress remove that immediately. Okay, Larry Kudlow, Director of National Economic Council, Cocaine Larry, and always permeable, strong to King Dollar. You know, remember he had a show on CNBC for a while. Green shoots in the economy and King Dollar on a daily basis when all the QE was going on. Told CNBC the approach looked at most closely centers on creating universal savings accounts, which would combine retirement, education, and healthcare savings into one vehicle. Money put into the account would be done so on an after-tax basis and taxed when withdrawn as well. But any accumulation of profits during the investment timeframe known as capital gains would not be taxed. Kudlow told CNBC this policy, if pursued, so it's after tax basis, that sounds like a Roth, similar to a Roth IRA. Any money put into the account would be done so on an after-tax basis. So a Roth IRA, if you're not familiar, the difference is the after-tax money. goes into the IRA account, and then it accrues. You can get capital gains tax-free since you already pay taxes on the retirement account money, as opposed to the regular IRA, individual retirement account, for our American listeners. Kudlow told CNBC this policy it pursued may extend to bonds as well as stocks. My God, they're looking at bonds too? Wow. So they're trying to get any demand. They're trying to make sure there's demand for stocks, bonds. I wonder what type of real estate scheme may be next, although from what I'm hearing from my best friend, who is a very successful real estate agent here in the DC metro area, that there is a lack of inventory. That's how much speculative capital is coming into this area, and I've heard it's that way in some other markets too in the US. Kudlow noted that this and other ideas have yet to be fleshed out, and no decisions have been made. Then why would CNBC report this? This was probably leaked to CNBC. I mean, how much good reporting does CNBC actually do? This was probably almost definitely leaked by the Trump administration as a trial balloon. Development comes as President Trump seeks re-election this fall. He has sought to distinguish himself from his potential Democrat rivals by accusing them of pursuing socialist policies, while he has touted tax cuts and deregulation under his administration. Let me add again, he has not cut spending. This is very dangerous to do. Supply-side economic stimulus, increased government spending, when the U.S.'s debt to GDP ratio is already over 100%. It's unprecedented. There should have been corresponding cuts in government spending, but that's the only thing both political parties can agree on at this point, Republicans and Democrats, to simplify their strategy, their spending strategies. Republicans are mostly borrow and spend. Now, Trump has recently put in those tariffs, but most Republicans for decades now have not been massive tax hikes. Republicans have mostly been borrow and spend, supply side, and Democrats have been tax and borrow and spend. After the Great Recession, the percentage of American households owning stocks fell to 52% from 62% before the crisis, according to Gallup. Also because a lot of Americans didn't have savings. They, from speaking anecdotally with a lot of people back then, a lot of people in the last, really a few years after the 2008 financial crisis, a lot of people had to liquidate their retirement savings accounts, their stock accounts, and their retirement savings accounts early. They had to pay penalties to make ends meet and pay their bills. There was a lot of people that had to do that. I'm not sure about now, but that's what I heard a lot after 2008-9. Tax break, if enacted, would represent a pretty substantial amount of money for people to have for retirement, according to Stephen Moore, economist at the Conservative Heritage Foundation, close confidant of the White House. That's the type of thing that would expand ownership, more tells CNBC. Stock markets rise under Trump's tenure is a well-documented point of pride for the president and his top economic officials. This is after candidate Trump, before he won the 2016 election, was calling the stock market a big fat ugly bubble and was talking about inflation and other things. President Trump is very different than candidate Trump. The White House publicly has been pointing to this package as a new shot of adrenaline in the economy, whose growth shows signs of a slowing 10 years into an expansion. A payroll tax cut would become an option only if the economy experienced significant decline, according to two senior administration officials. Separately, Kudlow has suggested cutting the tax rate to 15% for middle-class earners. So this is government rules changes. There's no corresponding cuts in government spending. These other tax cuts are only going to grow the deficit even larger. So this big fat ugly bubble, they are all in. The policies that are being put in place, they want Dow 35,000 in less than a year, regardless of the real economy. I love Weekend at Bernie's. Someone said Weekend at Bernie's, that is a great movie. That's one of my favorite all-time movies. I laughed my ass off so hard seeing that movie. That movie's funny. They need to remake that movie. Do you think they are going to fix things so we can go to 9 billion people? The Raven asks. With the cerveza problem in China, that looks like it's going to be hard for the short term. The cerveza problem is getting worse in many other countries. The next 2 to 4 weeks, in my opinion, are going to be very telling because of the long incubation period for the cerveza problem. The Cerveza problem is asymptomatic for 2 to 4 weeks, up to 24 days, from what I've been reading. Shout out to Chris Martinson if he's listening. Chris Martinson's doing amazing work, and if you're not aware, all of his videos on the Cerveza problem are being 100% demonetized. He is not making a cent off any of this stuff. And he's also on the hit list. Well, not on the hit list. He's on, well, hopefully not. He's on the naughty list for the Chinese government. The Global Times wrote a hit piece on him, calling him a lying profiteer, that he supposedly has 12,000 new paid subscribers. I spoke on the phone with him a week or two ago at length, and he told me he hasn't made a cent off any of his Cerveza problem videos. And the Global Times, this state-run propaganda, is claiming he has 12,000 new paid subscribers at like $5 a month, which would be like $720,000 a year in new revenue, which is a total lie. He's doing all this hard work that's really helping everyone out with the information, with given his background as a PhD in virology, for not a single cent. And he's getting attacked by the mainstream media, he's getting attacked by the mainstream doctors, getting attacked by the Chinese government. You know the saying, don't kill the messenger? Okay, so I'm going to take a look at listener questions and comments. I did get a super chat from Monica. Thank you, Monica. Monica says, so effed up that Google is demonetizing for Cerveza. Yes, I agree. I've had 5 videos demonetized in the last 9 or 10 days for saying the real name once. So for now, we'll call it Cerveza. Cerveza problem. And hopefully that won't get my videos demonetized. If I get all my videos demonetized, I'm not sure what I'm going to do. I may have to move more and more of the content beyond the paywall on my Patreon account. Not sure what to do. Because I can't spend a couple hours a day looking at articles and writing things out or making short videos if I'm not making $1. IBJI says, I guess there's no relationship between lower tax revenues and the tax cuts for the rich. Actually, so past research said that tax revenues did not go up. Excuse me. The research reports in the past for supply-side economics say that there was no correlation between tax revenues going up and the supply-side tax cuts. But actually recently, the U.S. Treasury receipts have actually been substantially higher. However, the fact that Treasury receipts are a little bit higher does not offset the massive increases in U.S. federal government deficits and the size of the spending, the U.S. budget, and how large the deficits are. So the increase in tax revenues that the U.S. is getting recently is not offsetting the size of the federal government spending and the budget deficits. So it's complicated. Again, supply-side economic stimulus without corresponding cuts in government spending when the official debt to GDP is over 100%, in reality it's way larger than 100%, is not a good idea in my opinion. But for now, this could change, but for now deficits don't matter. That could change at any point. Anthony Zavaro says, it's a trap. Yes, I can see the General Akbar from Star Wars. I can see the meme right now. Desperate to prevent those capital gains tax revenues from dropping by $1 trillion in a very short amount of time. Because if that does happen, the Federal Reserve has to step in with insane amounts of new QE or not QE or whatever they're going to call it next. Probably won't be called QE. Okay, it's not General Akbar, it's Admiral Akbar. I apologize. Oh, please hit the like button. That'll really help. Almost 300 people watching. So the policies that are being talked about, these are countermeasures in case there is a stock market crash. Jerome Powell on February 12th talked about how the Fed will aggressively use QE to fight the next recession. Fed chairman says central bank will use forward guidance communication with markets about interest rate plans. He said Wednesday that the central bank would fight the next economic downturn by buying large amounts of government debt to drive down long-term interest rates. Also, if the yield curve goes inverted again. If the yield curve inversion gets worse, this next Fed rate cut on Fed fund futures that is starting to price in at least one rate cut for 2020. If the inverted yield curve goes in even more inverted, the likelihood of another Fed rate cut will be very high. My voice is starting to go. I should wrap this up. I still have to work on getting out that Sandstorm Gold analysis from Q4 2019 and the annual report and some tidbits from the conference call for Patreon, for my 250 Patreon account contributors before I go to bed. Douglas says the Fed will probably use a wet fart as repo collateral. So, one of the things why the 2008 financial crisis occurred, besides derivative problems in the derivative market, mortgage-backed securities, others, is in the repo market. Mortgage-backed securities back then, the amount of repos exploded in a very short amount of time, 2007, 2008. It was under 100 billion a month. It went up to 300 billion a month, 400 billion a month in 2007 and 8 before the Fed had to step in. And mortgage-backed securities were used as a lot of collateral. They were considered quote-unquote good collateral. And then in a very short amount of time, about a year, this whole thing unraveled in the repo market with mortgage-backed securities. So there were all these $5 trillion in derivatives tied to the real estate market and mortgage-backed securities. And then on top of that, in the repo market, mortgage-backed securities were good collateral and considered assets. And then in a very short amount of time, about a year, for all this to unravel, mortgage-backed securities went from being considered quote-unquote good collateral and assets to being quote-unquote bad collateral and liabilities, or toxic liabilities. So they switched from being an asset to a liability. And we could have a similar thing playing out in the near future. David Rodriguez says the dollar will pop. The balloon is just thicker than last time. That's why it's taking longer. Actually, David, it's more complicated than that. I recommend you go to my archives on my channel and look up my dollar tug of war. Or take a look at Brent Johnson's dollar milkshake. My dollar tug of war is about 6 minutes talking about it. And all these other players, foreign governments, foreign banks, foreign corporations, all bet, watch Peter Schiff videos on YouTube. I really think they did, actually. And bet that the dollar was going to collapse not too long after the 2009 QE program started going. And for a while they were right, so they borrowed as much dollars as they could, many, many trillions, and doubled the amount of dollar-denominated debt outstanding over the last 10 years from about $5 trillion, $5.5 trillion in dollar-denominated debt outstanding globally to over $11 trillion. So it's more complicated than dollar collapse. I have no idea why the Cerveza problem occurred. I have some theories. But if I talk about it on this video, it might be demonetized. Maybe I'll do a show with Chris Martinson. I'll think about it. The virus is the Cerveza problem is a distraction. The economic fallout is the real show. Actually, the Cerveza problem could be the black swan. The Cerveza problem could be the black swan. Because then more people are going to start to see that the global economy is in big, big trouble. Because a lot of people are still believing the mainstream media that the global economy wasn't having that many problems. Only recently, in the last couple weeks, are people starting to question China's numbers. Christopher says the cerveza might be a bioweapon. I think there's a lot of circumstantial evidence it was, and it was accidentally got out. Okay, well, I think that's it for tonight's show. I want to keep it fairly short. I want to thank my 250 plus Patreon account contributors. I think it'll be 300 now in less than 6 months. It's rolling pretty rapidly. We're getting 1 or 2 new signups a day. My 10 or so monthly PayPal contributors, thank you very much. I also take the top 6 crypto donations if you want to throw me one of those. Or, well, I take fractions of crypto as well. I have the wallet links in the information and description section, and hopefully then I can focus on content research I think I need some more water. Content research, information analysis, and financial education that you won't get anywhere else. I'm trying to connect the dots and do financial detective work. Try to be your best not information ninja. I was research ninja. I screwed that one up. I should just create that title. I should make a business card and just say research ninja. That'll be a hit at networking events. Research Ninja. That's my official job title. CEO of Wall Street for Main Street and Research Ninja. Okay, everyone, have a great weekend.